Analysts who called last 0.28 XRP bottom states biggest opportunity of this cycle. So our question is, did XRP just hit the most critical technical floor of 2026? Now, imagine having a track record where you perfectly predicted the exact 0.28 bottom of the last XRP cycle, and then turn around and call the exact macro top at $3.37, while everyone else was screaming for $100. When an analyst with that level of accuracy speaks up, you don't just listen. You zoom out and study the data. So in this video, the market is shaking, but a massive alert just dropped from the legendary analyst JD here on X. While the Moonboy influencers have been consistently wrong during this entire decline, a structured, data-driven target has officially been hit. XRP has corrected a massive 72% from its recent highs, landing exactly on a long-standing technical target. So is this the definitive turning point for the asset, or are we set for one final shakeout before the year ends? So in this video, we are diving deep into the massive symmetrical triangle dominating the charts and breaking down why this specific window might be the most lucrative accumulation phase of the entire market cycle. So let's get straight into it. Our very first question is, why is this 72% correction a hidden blessing for long-term holders? The numbers don't lie. XRP has officially pulled back 72%, landing right at $1.01 price target that disciplined observers have been watching for months. Analyst JD here highlighted that this exact zone represents a historical accumulation area. So in my opinion, this 72% drop is exactly what separates the emotional retail traders from the strategic accumulators. When the market falls this heavily, the average trader panics and sells at a loss. But as a market observer, I see this as a textbook dollar cost averaging window. The hype is gone. The weak hands have been flushed out, and the price is back to an area where large-scale players like to build their positions. It's a clean slate. Now, is the symmetrical triangle signaling a massive macro breakout? If you look at the macro charts right now, XRP is compressing inside a giant symmetrical triangle pattern that has been developing ever since the previous market peak. And this, as we can see on this chart, this symmetrical triangle right here is formed by these yellow lines, these two yellow lines right here. The price action is getting squeezed tighter and tighter as it approaches the very tip or the apex of this massive triangle. Now here's my opinion. Symmetrical triangles are like a high stakes chess match between buyers and sellers. The price moves get smaller, the volume dries up, and the tension builds. So my personal takeaway from this structure is that a massive volatility expansion is inevitable. Historically, when XRP nests near the apex of a multi-month triangle, the resulting breakout is violent. We saw it in the previous cycle right here, and the current chart structure is a near identical mirror image of that history. Now, what is the real story behind the private 0.60 to 0.80 buy orders? A fascinating detail emerged when a follower questioned JD about a previous buying range between 0.60 and 0.80 that used to be highlighted on his public charts. The analyst clarified a very important distinction between public data and private trade setups. He still holds a substantial buy order resting in that lower 0.60 to 0.80 range. Now, here's my opinion. This is a vital lesson in risk management. My perspective on this is clear. You should never blow your entire capital on a single price point. While 1.01 is a fantastic statistical area to dollar cost average, having safety net orders lower than between 0.60 and 0.80 is pure genius. It shows that top-tier analysts don't trade on hope. They prepare for every single scenario. If the market gives us a flash crash, those deep buy orders get filled automatically while everyone else is panicking. Now, will short-term bullish divergence save the price before the real bottom? Looking at the immediate horizon, JD pointed out that a bullish divergence could be forming on the short-term time frames. This technical setup typically suggests that even though the price has been sliding, the underlying selling momentum is losing steam, which frequently triggers a temporary relief rally. So in my opinion, I think a short-term bounce here is highly likely. The market is severely oversold, and the relief rally back up to test local resistance would give the bulls some much-needed breathing room. However, my personal stance is to remain level-headed. A short-term pump doesn't mean the macro bottom is fully locked in yet. It's a trading opportunity, but the real structural shift takes time to solidify. Now, while the short-term recovery is on the table, the macro timing tells a deeper story. Historical data shows that definitive ironclad market bottoms usually form during the third or fourth quarter of the year. Now, this timeline makes perfect sense to me. The summer months are notorious for lower trading volume and choppy sideways action. So as a market observer, I am perfectly content with XRP carving out a bottom over the next few months in third quarter and fourth quarter. A slow grinding bottom is much healthier than a sudden spike because it builds a massive foundation of support that can sustain a multi-year bull run. Patience in the second half of this year 2026 will be rewarded. And finally, here's our overall conclusion. The evidence pointing toward a massive macro shift for XRP is becoming impossible to ignore. We have an analyst with a proven track record pointing out that a 72% correction has brought the price exactly to a major $1.01 technical target. While short-term bullish divergences might give us an immediate relief pump, the structural chart shows that the true ironclad cycle bottom is pacing itself for the final quarters of the year. For disciplined market observers, this apex of the symmetrical triangle right here isn't a place to fear. It is the zone where the greatest opportunities of this entire cycle are being generated. So we need to stay patient, manage your risk with tiered orders, and don't let short-term noise distract you from the macro chart. And this finally ends our video. Thank you very much for watching and see you on the next one, or you might just as well check this next recommended video right here.